Under the government's comprehensive tax reform program, the Semiconductor and Electronics Industries face a corporate income tax rate of 15%. The Semiconductor and Electronics Industries in the Philippines, or SEIPI, is now appealing for some consideration from the government. Enrico has the story.
SEIPI President Danilo Lachica, in behalf of the industry he represents, is asking the government to consider a 10% corporate income tax instead of the proposed 15% rate under the Comprehensive Tax Reform Program. This 10%, said Lachica, will be inclusive of all local business taxes and real property taxes. This was disclosed during the Philippine Semiconductor and Electronics Convention held in Pasay City last week. Under Package 2 of the Comprehensive Tax Reform Program, the government will remove the perpetual 5% tax on gross income earned being enjoyed by companies inside economic zones. The SEIPI president disclosed that their 10% proposal was the consensus of the SEIPI members, who all agreed that it was a figure they could all live with. SEIPI President Danilo Lachica also added that as responsible corporate citizens, they would like to do their share in helping the government raise funds for its Build program. Meanwhile, Lachica also asked the government to define what it means by new technology. This is with reference to the incentives that will be given to new products. But the question is, how do you define a new product? Lachica was quoted as saying, "In our industry, it has to be faster, cheaper, and of better quality. If you have those performance parameters well defined, that it itself qualifies as a new product." He added that the association does not want to disincentivize its member companies that have already poured huge direct foreign investments and provided many jobs in our country. According to official data from SEIPI, revenues from electronic exports increased by 5.4% to $8.69 billion in the first quarter of 2018 alone. That is equivalent to 456.4 billion pesos from 432.76 billion pesos about a year ago. Leading company in this sector, EBITDA Philippines Incorporated, through its president and CEO, Jose Coba, said that although parent companies are encouraged to invest here, it would be difficult to do this if the country's policies are not competitive. He also pointed out that many foreign companies are willing to invest with the current set of incentives.
Indeed, it would be prudent to consider the foreign investments coming into the country, even as we implement tax reforms to fund our infrastructure programs.